I was once selling a house in Marietta and we got an all cash offer, which for me as a real estate agent representing the seller, that was pretty cool. But most of us don't have enough cash to buy a house. So what do? We go to somebody to lend us the money. We go to somebody to give us a mortgage. What is a mortgage for a house? That's what we'll talk about next. Hi, I'm Kelly Vandever. I'm a real estate agent in the Alpharetta, Georgia area with Keller Williams, North Atlanta. Okay, so you don't have the cash to buy a house. The good news is there are a lot of banks and lenders that are willing to give you money to buy a house. The money they give you is called a mortgage. Before a lender will give you a mortgage, they're going to look at three things in particular. One, are you the kind of person that pays back the money you owe? Two, do you make enough money to pay back a mortgage and at the same time still pay off your other debts? And three, if God forbid you don't pay back the mortgage, can they sell the house and get their money back? Let's take a closer look at each of these. Number one, are you the kind of person that pays your bills? There's the old adage that the best predictor of future behavior is past behavior. So what do lenders look at to evaluate whether or not you are the kind of person that's paid your bills in the past to know if you'll pay the bills in the future? If you guessed your credit score, you'd be right. There are 3 credit bureaus in the United States that keep track of whether or not you pay back the money that you owe to somebody else. And your willingness to pay back that money and your history of paying back that money is what makes up your credit score. A lot of people don't even try to buy a house because they just know that they have bad credit. Maybe they know because they've gone on Credit Karma or one of the similar kinds of programs and they've seen their credit score, or maybe they know that they haven't been paying their bills, so they know they have bad credit. But I think other people assume they have bad credit, maybe because they don't have any credit cards or they've never bought anything on credit, or they know they have a lot of student debt and so they think, I can't get a home loan. Well, I wouldn't just assume that you can't get a home loan. I would talk to a lender. They will tell you whether or not you qualify for a loan. And more importantly, they'll tell you the types of things you can do in order to qualify for a mortgage sometime in the future. There are a lot of places you can go that will tell you how to fix your credit, but talking to a lender, I think, is a better option because they know which of those things make a difference to getting a mortgage. Sometimes those places that help you get the credit repair are helping you get credit cards, but not necessarily the best things to do in order to get a mortgage. So talk to a lender to get the best advice there. The second thing the lender is going to look at is, do you make enough money to qualify for a mortgage? Particularly, they're going to look at what your income is, how long you've had that kind of an income, and how much debt you already have, how much money you owe other people. Lending institutions have statistical data from which they derive formulas for how much people make and how much debt they can have and whether or not they can afford to make house payments. They want to lend money to people that fall within their parameters because it's less risky for them to lend you money. Assuming you have a good credit score and assuming you make enough money to be able to afford a mortgage, there is still money that you have to have in hand, in other words, saved up before you can get that mortgage. I do another video about how much money you need to have in hand or how much money do you need to have saved in order to get a loan, and check that video out. We'll have a link below. The third thing the lender wants to know is the house that you're going to buy worth the money that you're planning to spend. If, God forbid, something should happen to you and you don't pay back the mortgage, the lender needs to know that they can sell the house and get their money back. When you go to buy a house with a loan, the lender is going to make you pay for an appraisal. An appraisal is done by a professional who's specially trained in order to evaluate how much a house is worth. So the appraiser will come in and they'll let you know what the value of the house is to make sure that the money you spend on the house is not more than it's worth. Let's say all those factors are lining up perfectly. The lender is happy because you are a person that pays your bills, you have enough money to pay those bills in the future, and the house is worth what you want to pay for it. Then you can get a mortgage. A mortgage is made up of 2 basic parts. One is the principal, or the amount that you borrow to buy the house, and the other is interest. Interest is money that you pay to the lender for the privilege of borrowing the money. Right now, at the time of this filming, interest rates are incredibly low, which is good news for you if you're trying to buy a house. That means you can get more house for the money because of the lower interest rates. In addition to checking out you and checking out the house, there's one more thing the lender wants to do, and that's to make sure that nothing gets in the way in case they have to sell the house. And the two big things that could get in the way is, one, if you don't pay your taxes, then the government, by law, has the right to get their money back before the lender does. And the other thing is, if the house gets destroyed, God forbid, by fire or something else, then they can't sell the house. So they want to make sure you have good insurance. Because of these things, lenders will often collect the money to pay the taxes and to pay the insurance. They'll just fold it right in with the rest of the mortgage payment, and you pay it all at one time. They take that money out and put it into an escrow account. And then once a year, they pay your taxes and they pay your homeowner's insurance. So there you go. A little bit of information about what a mortgage is and how you go about getting it. For the full scoop, talk to a lender. And whether it's the first time buying a house or the first time in a couple of decades, I hope this will help make your move easier.